Alright, traders, a very warm welcome to you all. This is Avril from the Tradepsyche, and I welcome you all to the post market analysis, outlook, and expectations from the market for tomorrow. Alright, so in this video, we'll discuss about how the markets were today, what discussion we have had in our Telegram group, and how the markets can be tomorrow, what will be some of the crucial levels, crucial supports for tomorrow. And we'll also discuss that what overall is going on in the markets, why there is so much volatility, even though VIX is at 14, 13, 13.5, but VIX but the market is behaving in a way that the VIX feels like 16, 17. Why there is so much volatility coming in the market? We'll discuss everything, and we'll also discuss today's market because today was not even today. I'll say, but on a general basis, if you look at the markets from past 3 to 4 weeks or past 1 month, the markets are just going in a zigzag way, and it's just a phase in the market, right? I have seen these phases, but let me tell you from my experience, I have seen multiple times that the market they go, and these are, I'll not even say that these are sideways markets. These are ultra volatile markets within a range. Why these markets are ultra volatile and why these markets are dangerous? Because you cannot go swing and you cannot go positional in these markets. Very simple. Because the moment you'll think, because what the current market is doing, see, we'll discuss each and everything on the charts. Let's start the discussion, right? I'll go to my Telegram group. We discussed that we can gap up around 70-80 points, but the change in OY was negative today. The major resistance today has been added at 25,500, right? And the point being, today the resistance was added at 25,500. Market straight away gapped up over 25,500. So first, what the markets did is it lured each and every retailer, and then it dumped the market, and it is going on from I think many days. So the markets are not even making sense. See, the markets rose like this, it corrected, then again it rose, then it corrected with the gap down. And the most irritating part is the markets are moving in gap. This gap got created, markets went trending sideways. This gap got created, the market went trending sideways in the first half, then trending negative, trending bullish in the first half, then trending bearish in the second half, and particularly the second half was sideways. So now the markets have flipped their trajectory. If you remember, yesterday we discussed that now the momentum is coming in the first hour, and the second half is going sideways. So we have to adjust ourselves with the market in a way like that. And the current pattern is the markets are trading in a gap strategy. And if at all you look at daily time frame, you'll analyze the markets are doing 4 days up, 3 days down, 4 days up, 1 day down, 2 days up, 1 day down. And today also the markets went till 25,650. It captured the liquidity, but it got a sudden drop. Like the markets are so thin in volume perspective that we dropped almost, I think, from 25,600 to 460. 130 points we dropped in the span of 5 minutes. This is not normal. These are not normal markets. So if you are trading with aggressive positions in the market, reduce your positions. That is the only thing which will save your capital. Reduce your quantity, because if each and every trade is hitting a stop loss, then why not to give a small stop loss, right? So the markets, and today one very weird thing with India VIX also happened today. While the markets were going up, they crashed the India VIX to the levels of 12, 12.8, 13. But then in the second half, they rose the India VIX, right? So yes, the markets are tricky, and I think there is a case going on in Jane Street, that what is the Jane Street model? Jane Street's model is that it heavily buys out the money options on both call and put side. It lures the retailers, it keeps the market up, and the moment it cashes out, it dumps the market. And I think still India is banned in Jane Street, but it is operating with another name, another entity. The people are same, because if you see this price action, it is not a normal price action. No level is being respected. 25,500 broke down, but it got back covered again. 24,400 broke down, but it got broke down again, right? So we discussed that yes, but we still mention that FI stance is bullish. But in the short term, yes, our markets are heavily derivative based, right? Then we booked our loss in swing shorts in Nifty because the markets, and even after gapping up, the problem is not the gap up. Even after gapping up, they made the market went up by 150 points, and then again a drop by 115 points. Right. So it's totally fine. It's a sideways market, and we then mentioned that Nifty is getting squeezed day by day, trapping all the traders on both sides. Right. So unless we'll discuss this range, then we mentioned yes that markets would be insane to do this, and actually the markets from the downside it showed huge volatility. If you see, markets gave a breakdown. Just I like when the markets were live, I was just asking myself when this breakdown had to come, then why did the market rose in the morning? When this rise had to come, then why the markets fell here? Right? So yes, the markets are tricky for traders like us, right? So the only thing you can do here is do not you can blame the market however you can want how much you want, but the only thing as a solution here you can do is reduce your quantities in the market. Right. So let's start the discussion for tomorrow. The markets are behaving very weird, and even not on the price action, but even the premiums today. Just before this fall, I'll tell you. Just before this fall, uh, and even today the premiums were behaving very weirdly. Why? Today, I think roughly around when the markets were about to fall, the stopped at one place. Even though markets were rising, but the put didn't decay. I specifically observed at that point of time. But since we all are not aware of the pattern, we could not anticipate that yes, a fall is about to come. Right. Then we mentioned that the markets are insane. The markets are very volatile, and then we summed up the market. So there was nothing much to discuss in the markets essentially. Right. So now let's start the discussion for tomorrow. All right. So now markets are in a strict range, and the daily drill of the market is open with a gap up. And this whole saga started from this trade deal thing. Before this trade deal started happening, right? And the whole fight is about this trade deal gap. Someone at this point of time, they do not want the markets to cover this trade deal gap. And someone on the top, they are pushing the markets down in order to make the markets cover this gap. Before this trade deal, the markets were moving so smoothly. This was such a beautiful phase in January, right? So the only thing now you can do is limit your positions and cut your losses small, right? So let's start the discussion for tomorrow now. The level from where today selling started to come is 25 650 660. So the only level above which you can go long tomorrow is 25 650. If any early candle sustains above 25 650, the first level you can target is 1050. Above 1050 you can target 25 880, and above 25 880 you can target 26,000. Since we have closed roughly around 470 or 480, the only level which you need to take care for tomorrow is 25 380. Because why I'm giving you 25 380? But because if we'll go on smaller time frame and we'll mark 25 390, again there will be a support from 390. So unless we break down below 390 decisively on early time frame, do not short the market, right? Let's below 25 380 we can capture 25 250 and 25,000. That's it. No trading range will be roughly this one for you. Don't I think do not trade in these markets. Why? I'll tell you, because the markets are squeezed in a way. If you see this trend line and if you see this trend line from the bottom, the markets are getting squeezed day by day. And the day when the breakout happens, and the breakout might happen in two ways. Either markets will fake down this breakout and markets will go up like this, the first probability. The second probability, markets will fake a breakout and then see a dump on the from the upside. Generally a tricky breakout of a triangle pennant happens like this. Or markets can do one more thing. It will trap on both of the sides. Markets will break down, break out, and then move like this. This will be the last probability of the markets, because seeing the current markets, I think it's highly possible. So do not trade unless this triangle pennant is broken out or broken down from upside or downside, right? From daily perspective, my stance will be still sell on rise, because we have not closed our prior daily high. We are still on the prior daily low, but it's just that we have to wait for a close below 25 380. Below 25 380 390 level, you can easily capture 25 250 and 25,000. Bullish, I've already mentioned you that above 25 650 you can start to slowly go bullish. But if at all you are an intraday player, then and only go bullish. If you are a swing player or a positional long player, positional long players only go long above 25 880. Swing long players go long above 25 750. All right. On the basis of opening, see again, I'll repeat the same pattern. If the markets open gap up, we can see a good short covering, then a dump. If the markets open gap down, we can see a good dump and then short covering like this. That's it. And tomorrow is Sensex expiry, so we will see the premiums, that how the premiums are looking. We'll go to Nifty Bank, and today, right, one very interesting thing has happened today. Bank Nifty has started to go weak on daily time frame. We were talking about Bank Nifty's strength, but Bank Nifty has started to go weak. Weakness was seen in Bank Nifty, and Bank Nifty, if at all we short the futures here, right, we can capture a good amount of futures on the downside in Bank Nifty, because IT has fallen a lot. IT will stop, or maybe the money might rotate into Nifty IT, right? So any move in Bank Nifty below 6800 will trigger stop losses for all the put writers at 6800, and the first level will be 6500 and 60,000. Below 60,000 we can think of 59,000, but all this bearishness will be negated above 61,500. Above 61,500 expect 61,700 and 62,000. All right. Let's start the discussion for gold. Actually gold yesterday was bearish, but today morning it opened roughly good gap up, and it is moving in a sideways direction as of now. So go long in, I'll go to early time frame. In gold, longs will only come above 161 600. Above 161 600, target for 163. Decent shorts will only come below 160. Below 160 you can target for 159, but below 159 this M pattern will get completed. This is the neckline, and if at all the markets breach this neckline, this one, the markets can target, actually on the lower side, the markets can actually target the start of this M pattern, which is this one or maybe this one. So the first level which market can target on the downside is 155, and below 155 151. So as of now, sell on rise for gold unless we capture 161 600 on the upside back again. Silver is going slightly bearish as of now, and silver is falling in the market, right? So if at all you want me to go on early time frame, let me expand this slightly. Silver has a supportive trend line on the downside, and yesterday the markets tried to breach it, but since silver today open gapped up, so it was moving good till the day, but slightly bearish as of now. So for silver, right, what you can do is you can short silver. Of course silver can come, and it is coming for this gap covering, but short silver, same pattern is forming. You can short silver below 2,75,000, below this level, below 2,75,000. The first level is 272 269 and 266. All right. Silver is also as of now sell on rise. Bullish entries will only come above 282 for 285 287. All right. Discussion for crude oil. Crude oil is looking very sideways as of now. It tried to fall, but it actually regained the fall. Bullish entries will only come above 60, I think 50, and keep a sell on rise mode till the markets are below 6,000. Still the markets are not below 6,000, but if at all it comes and sustains below 6,000, try to be in sell on rise mode for crude. Crude, we discussed yesterday, it's trying to make a M pattern, but this M pattern should have been declining like this, but it's trying to recover from the downside. So any move above 6050 can be bullish till 6150. Let's quickly discuss the change in wire data. Today for Nifty, almost 3 CR of shorts have been added and 2 CR of longs have been added. So slightly bullish data, bearish data. 25,600 has been marked as a good resistance. There is no bigger support, there is no great support, but small scattered longs have been added on the downside. So there is not much interest on the bullish side, much of the interest is on the bearish side. Total open interest 25,500 call sellers have taken over the put sellers and they are aggressive, so this level can be resistance now. Bank Nifty, will see that whatever weakness we are seeing on charts, is it visible in the data or not? Yes, almost 2 lakh more shorts have been added than longs in Bank Nifty. Major resistance is 61,200 and 61,600, and major support has been created on the downside 60,000. Open interest, if you tell you want to see the change in Y, 61,000 still continues to be a good strangle, good straddle level. So any move below 61,000 can take us to 6,500 and 60,000. Alright, so this was the discussion for Nifty, Bank Nifty, gold, silver, crude. I hope you have liked the analysis. The only request I can do from you guys is, do not trade with your maximum quantities in the markets as of now. The markets are very volatile and the markets are not respecting the levels also. Any break of any level is not getting respected. Any break or any breach on the upside is also not even being respected. We broke 650, 700, we went till 800, we got dumped from 25,800. Right, so do not unnecessarily force yourself on the market. Listen to what the market is saying. Right, cheers, stay safe in the market.